Okay, good evening guys, and welcome to the Netflix preparation for the earnings report this evening. Welcome everybody. How are you all this evening? Good morning, good afternoon, good evening. Welcome to the earnings report for Netflix. We never quite know what's going to happen. Last time it was chaos. They run it from their YouTube channel, and there's no knowing of when it's going to go live. It's always a bit of excitement for Netflix. We had a great earnings report this morning from Johnson & Johnson, but Netflix is always a bit of a drama. Shall we have a quick look and see at the price of Netflix right now? This is Netflix. You can see the price shot up as it does prior the earnings. Very excitable stock, this one. Does pop up, but there's going to be no great. It's a huge company, of course, but they can't be making any money. They are losing subscribers hand over fist, but they are now introducing a new model. But it could be the beginning of something big. It's great for the S&P 500, so I'm affected into it in some respect, but I'm not buying any shares of it today. I'm just enjoying the pump if it does go up, but this could drop just as quickly. So I'm not actually going to get into this stock. It's an unknown business really right now, and what I don't like about Netflix is anyone could do what Netflix does. It's simply a streaming service. Amazon could replace them, Apple could replace them. It's not like Tesla where they're the only ones who do whatever they do, right? Anyone could come along and replace them and do it better and cheaper. So for me, it's not really a stock to get excited about. It was once, but now it's kind of like, well, I don't know. What do you think? You want to be in the stock? It's popped up. My suggestion now is on a pop like that before the earnings, just take the profits, but that's entirely up to you, of course. All right, we're going to get ready for the earnings report. We will be up with it as soon as it goes live. In the meantime, enjoy some piano music. I'll see you back in a bit. Leave your comments below. We'll bring all the comments into this to the system, and of course, as always, give us a thumbs up and subscribe to the channel as well. There you go. Give us a subscribe and ring the bell. Always nice. Thank you very much. And give us a thumbs up as well. There you go. All right. I'll see you back in a few minutes' time. Enjoy the music. Bye-bye for now. Okay, if you just joined us, I have just a few minutes to go. The Netflix earnings is unlike any other earnings. You don't have a precise time, and we had some drama last time. They do it on their YouTube channel. They don't do a WebEx call like everybody else. They do it to obtain some subscribers, which doesn't work. They only have 15,000 subscribers on their YouTube channels. It's quite strange the way Netflix do their earnings report, but nevertheless, it's how they do it, and they post the video, so you don't know exactly when it's going to come out. There's always a bit of excitement with it. The stock is looking interesting right now, but we just have to hold on to our seats, expect the earnings in the next 6 minutes. It can come later though. We've had it before where we've waited for 20 minutes, half an hour before the video posts. If anyone has the link, please share it, but we've had this before in the past where people send me the same link in, and we just have to have patience and wait. It's not, for being such a mega cap company, it's terrible how they actually do their earnings report, but they do it through YouTube. It is what it is. We'll be back with you very, very shortly. As soon as their video goes live, we'll have it and we'll be sharing it with you all. Join us very, very soon. In the meantime, enjoy some piano music. We're just 5 minutes away from what should be the beginning of the earnings report. See you in a few minutes. Thank you. Just quickly replying to a market profit. The earnings report is out. This is the earnings presentation, I know. But the earnings presentation is where we see movement in the stock. We always do. It's always exciting. It's always great to listen in and watch. But yes, we're talking about the presentation. We've had this discussion before, and I know you've corrected me before. It's not the earnings report, it's the earnings presentation. And that's what this is all about. People want to listen in and hear what the CEOs have to say, and that's what we're listening in for. That's what we enjoy to present. That's coming up very, very shortly. Thanks, Market. If you've got the information, share it on the screen. Thank you. Okay, we're just now coming to the beginning of the earnings presentation. Now, if you've ever watched a Netflix earnings presentation with me before, you know it's a bit hard to predict, because what happens is they do it on their YouTube channel. Everybody else does it through WebEx and does a live phone-in presentation and Q&A, and it's great. What Netflix like to do, they like to do it through a YouTube presentation. So we are waiting for it to come up. We are looking at the shares. Now, last time we had a lot of excitement. We didn't know what was going on. It didn't do the presentation for a while. They do it through their YouTube channel. I don't know why they do it that way, but that's how they do it. Other companies like to present it as a live call. They like to make a video because they want subscribers on their channel. So it's kind of strange. Anyway, it is what it is. So all we do is this is what we do. We look at the YouTube channel here. This is the link that you get wherever you go to look for the presentation. And all you can do is refresh this until the new video posts. That's the way they do it. I don't know why. It seems silly to me, but that's how they do it. It doesn't make any sense at all to me, but that's what they do. So we're waiting now for the presentation, the Q2 2022. And that's the way they do it. So I will keep refreshing that for you until we get it. You never quite know when they release it. Beyond me, it's the only company that we follow that does it this way. Everyone else does it live. They make a video. I've tried to ask them why. I've asked them, message them and say, why do you do it this way? And no one's ever been able to give me an answer. So I don't understand it. Anyway, it is what it is. So my 10,000 be worth 11,000 and some change. Rob Brennan is making some money tonight on Netflix, looking very good. Very nice indeed. Bad economic data and poor earnings are very bullish right now. Well, market profit, like you keep saying, that this is a pump and dump. As far as I'm concerned, this right now is only a pump and dump if you've been buying it all the way up. Well, I haven't. I'm already in, and I'm in about, if you look at my month now, I'm in up by 17% over the month. I'm not buying in, chasing the stock. The stocks could drop 17%. My overall portfolio could go down 17%, and I would be back where I was a month ago. So I am perfectly happy with this pump. I believe that high-tech stocks have bottoms. I think we are very close to the bottom on all markets, if not the bottom. And I don't mind if it pumps. If it carries on going, that's great. My dividends are coming in. And many of these companies will not go back down. Johnson & Johnson today, its earnings was pretty good. It did drop though, but it bounced back, and I got more when it bounced back. So I got down here. So I'm down just 2% on this now, and I'm very happy to do that. I've got a bigger position, and there you go. So anyway, we're waiting for the Netflix earnings report to present. It's like this every time they do it. They do it via a YouTube channel, and you have to just refresh their screen until it comes up. Last time it was about 15-20 minutes before it went live, and I don't quite know why they do it that way, but they do. All right, and unfortunately, even their YouTube channel doesn't even say upcoming live streams as I do, so people know when it starts. They don't even tell you. It's crazy. As you know from my channel, we have upcoming live streams, and it tells you when the event is going to start. With Netflix, they don't do that. I wish somebody would talk to me. I would say, guys, why don't you put an upcoming live stream and let everyone know when you go live? But they don't, and it is what it is. So you know, we are where we are. We just have to wait for them to go live. But we are looking at the stock. This is it. This is the stock right now. It's going back down again. They are moving away, of course, that they're moving away from a subscription service to an ad revenue-based service. So they'll probably have the subscription service if you don't want to have ads. It kind of makes sense, like YouTube Premium, isn't it, really? And that's why I don't think anything special. I have Netflix. I subscribe to Netflix. But I have no loyalty to Netflix. At the end of the day, I can watch Amazon, I can watch Apple, I can watch terrestrial TV. I don't care. As long as I watch the program I watch, it doesn't matter to me. I don't see anything great about the product at all. Anyone can put a movie on any channel. I don't see the point. So they've lost all their subscribers. They've not lost as many as they thought they would this quarter, but nevertheless, they've lost some. I think it's, I mean, it had a huge growth a few years ago, of course. It's a part of the S&P. I'm affected by it from that point of view. So, I you know, if it goes up today, then great. You know, I've got a position with the S&P. As you can see, I'm up today 4.66, not because of Netflix, really. The overall markets are up. This is VU today, up in the after hours again. That's Netflix, of course, but not just that. We've got Tesla, who's up in the after hours. Johnson & Johnson's now improving again, and Google has continued to go up. I'm keeping these stocks open because I think they're relevant to Netflix, but anyway, we're watching Netflix right now. Market profit, let's bring his message on the screen. Just keep praying that the bad economic data coming in, but if the economy starts to recover and we start getting better earnings, look out below. Bad equals good right now. I think if we got good numbers, it wouldn't mean the markets would crash. I don't think we're living in an upside down world. I just think we're living in a world that people are investing in the future. Technologies are different. All my EV space is exploding. My solar, my wind, my exploratory stocks, my stuff for the future is all doing well. Oil, not interested, going down. So that's where we are. Anyway. We are keeping an eye on, this is the Netflix earnings report. We are keeping an eye on it. We're waiting for Netflix to post their video to their YouTube channel. It's the way they do things. It doesn't make any sense to me whatsoever, but that's how they do them. Anyway, let's put it back up on the screen. There it is. As soon as they post their video, we'll have it. Last time it took a while for them to do it. Is anyone a bit amazed about this? We had a discussion on it last time. Netflix. No one tells them how to run a YouTube channel. They only have 15,000 subscribers. It's like the only people subscribed to their channel that are their investors. The only things they post are their earnings, and they always post them late. They don't put an upcoming live stream to tell you when they're going to go live. I never quite understand how Netflix operate like this. But they seem to get away with it. Anyway, we are where we are. The stronger the economy gets means the Fed will continue to tighten financial conditions. So everyone's praying it gets worse, so the Fed will support the markets again. I don't really care. I'm not looking for it to get worse, so the markets Fed support. I am happy with my stocks. I'm looking for the future. Today. We've proved in England, if anyone was any doubt, that global warming is here. Companies that we saw the other day when a government pulled out from backing Enphase Energy, it went down 10%, and then moments later it went up 12% because private money comes straight back in. We don't require the government. We don't require the Fed. At the end of the day, we need to switch to renewables. We need to switch to solar, wind, EVs. Space exploration, all this stuff, and if governments don't want to back it and policies, it makes no difference. It's going to happen anyway. You can't stop it. So I am fully into those stocks, and all those stocks are up. Enphase Energy is 23,000% up now, and there you go. So I keep buying it all the time. Not worried what the Fed does. I'm not worried what anyone does. I drive my own bus and my own ideas. It's just the way it is. It makes no sense, but the stock market can't function without the Fed. I think that's what you mean. I'm just trying to translate what you mean there. Can't function without the Fed. I don't know. People said Elon Musk would never make Tesla work. Had no backing from anybody. Everybody wanted it to lose. Well, one of the biggest companies in the world. I don't know. I'm not really a believer in that. I follow my own path. It's why I don't chart read. Okay, here we go. We're trying to get the Netflix up. And we're still waiting for it. As soon as it comes live onto their channel, we'll bring it to you. We know the earnings is out, but this is the earnings presentation that we are waiting for. And they present it through their YouTube channel. That's how they do it. I would love to talk to their marketing department and say, hey guys, do you know how bad this is? How rubbish your presentation is? But it's what they do. Anyway, all I can do is refresh it. What amazes me, why I'm always blown away by their presentation, is the fact that they have it's from all brokerages. It links to this YouTube channel. Okay, this is where it links the broadcast to. If you remember last time, we waited and waited and waited, and all of a sudden the video goes live. That's just how they do it. They don't do it on time. They do it as and when they want. They don't have a tab here which says upcoming live streams, which tells people here is the live presentation, get ready for it. Most companies have that do use YouTube as an extra thing for people to watch. They promote the channel and so you get people in the chat getting excited about the company and talking. Netflix don't do any of that. They just do nothing. It's why they've only got 15,000 subscribers. I've got coming up to 4,000 now. I've only been going a year, and I'm just me. Anyway, whatever. Is Netflix doing well? Is Netflix doing well? Good for market overall. I don't really get how it works. Rob Brennan. They don't have a thumbs up smiling thumbnail either. No, it's ridiculous. Netflix. I mean, it's a huge, billion-dollar company, and it acts like Fred Blog's Jack the Lad YouTube channel. I said this last time, but there it is. They portray their image how they like. I'd love to say something positive about Netflix, but I can't. I like the channel, but it's not the channel I like, is it? It's not the channel you like, is it? Really, it's just the programs they put on it. I mean, Netflix marketing and management is like Fred Bloggs the Dustman. It's rubbish. Netflix is doing bad. That's why the stock is up here. They don't know how to run a YouTube channel. I tell you that for nothing. They ain't got a clue. Anyway. I wish they'd listen in. Is anybody from Netflix listening in today? Anyway. What can I say? We're just waiting for them to go live. I rarely use Netflix anymore. Amazon Prime streaming is better. Yeah, Amazon know how to do a presentation like Apple do. Apple's presentation. I tell you the best presentation, though. The best presentation was Arrival. Arrival was great because we didn't just have people phoning in like we do with nearly every other company. We had live video calling, and it was all the CEOs and representatives and the people who work. It was brilliant. Arrival was the best presentation I've ever seen. A new company, a small company, they know how to do a presentation. One of the worst was Robin Hood. Robin Hood, awful. When they had their IPO, they didn't have internet connection. They were all over the place, and incredible. It's incredible that you can have a billion-dollar company behave like Fred Bloggs the Dustman. I'm just using that. I don't know why I'm saying Fred Bloggs the Dustman. I just am. All right? I just am. I'm just saying it. Anyway, we are just waiting for the Netflix earnings to start. They do it through their YouTube channel. They don't tell you when. They just start it when they feel like it. But it's after hours is when it's supposed to go live, which is now. And this happened exactly the same last time. Virgin Galactic know how to do PR very well. That's exactly why I buy it. Because Richard Branson knows exactly what he's doing. He must be laughing at Netflix every time they do this. Virgin Galactic know how to do PR very well sometimes when Branson is involved. But their earnings calls, George M just subscribed. Thanks a lot, mate. But their earnings calls aren't very well done. The earnings calls aren't very well done. I'm trying to remember the last one. I can't remember it now. Anyway, very bullish in the short term for Tesla right now, no matter how bad or good. This is interesting. This is interesting. If you've got someone bearish and bullish coming together and agreeing on the same stock, that's good. Very bullish in the short term for Tesla right now. No matter how good, bad, or good the earnings are tomorrow, it's going to rocket. Market dynamic want everything to go up right now. Okay, that's interesting. That's interesting. Let's have a little look then. Let's have a see for tomorrow. I think you're absolutely right. It's why I've been buying more. and courtesy of Rob Brennan, of course, who donated one to me. Much appreciated. The overall markets today are up nearly 4.57%, and looking good. VU is up in the after hours, up again. Virgin Galactic is just down 1% in the after hours, not concerned. Tesla is up 0.38 in the after hours after a 2% up today. Johnson & Johnson's come back up. I bought the dips. I've now got 8.3 shares of it. Google is up in the after hours as well, and we're all looking good. Now, if you've just tuned in, we are waiting for the Netflix earnings to begin. They do it on their YouTube channel. They don't tell you when. They don't promote the video. They don't do an upcoming live stream. They have no idea how to run a YouTube channel. But anyway, we're on their channel right now, and we're waiting for them to start. And they'll start whenever they feel like it. It's what they do. All right, here we go. Subscribe and ring the bell. Let us know you're here. Let me just make a slight adjustment to that one there. Hang on a minute. Let me just make an adjustment to this one. There we go. That's better. You can't see what I'm doing probably, but it's important. I like to do it. There you go. There you go. All right, just made a slight tweak there. If you could subscribe to the channel, let us know you're here. That'd be absolutely great. Thank you ever so much indeed. And give us a thumbs up. We're just waiting for the earnings report here on the Day Trader to begin. Tesla calls market profit, or would the implied volatility make premium super high cost? As you all know, I don't do options trading. I don't really believe in it. I don't like making predictions. I just buy the stock, own the piece of the pie, and don't really have any worries or stress. That's how I do things. Anyway, we're waiting. Let's go back and let's see if they've updated their YouTube channel yet. Let's have a little look in. Let's have a little look. Okay, refresh the screen. All of a sudden they post it. You don't know when it's going to happen. They just post it when they're ready. Do I sound critical of Netflix? Yes, and I think we should. You shouldn't let big companies get away with it. Call them out if they're wrong. They're wrong. I mean, they're wrong. They don't know how to run a YouTube channel. Okay, let's. We're still waiting. And if you've just tuned in and you're wondering what the hell I'm talking about, this is Netflix YouTube channel. This is where it goes live in a minute. This is where they post the link to. And they don't give you a time. They don't have a playlist of when the upcoming live streams. See, there's nothing even in the playlist. I mean, hello, man at Netflix. Set yourself an upcoming live stream playlist. It's the first thing you do when you get a YouTube channel. Let everyone know what's going on. I'm just saying. Give some people some information. Anyway, makes me laugh. But anyway, that's why I'm not subscribing to their YouTube channel. All right. They've only got 15,000 subscribers. It's no surprise. So we're just waiting for them to go live as soon as they post their video. It often happens in the first 15, 20 minutes. We just don't know. And if it doesn't go live after 20 minutes, then we just end the stream. But, you know, you can only do what you can do, right? Okay. Anyway, if you look at the stock right now, the stock it popped up. It popped up. It's not doing anything right now because there's nothing going on. No one can get any information from Netflix. So there you go. It has fallen back slightly, but not much. If we look at the candles, there was a good green candle, and then it started to sell. But as you can see, that's where we are right now. We're just waiting. Let's have a look. Very pricey. Everything is screaming risk right now, despite low volatility and bad economic data flooding in. Either we are entering the next melt-up phase, or this is the mother of all bull traps. It's only a bull trap, remember guys, if you buy on the rise. If you've been buying at the bottom, have been now for the last 3 months, then you are already doing very, very well. You don't really care. I'm not buying in now. I'm buying when things go below the prices I've already got them. Anyway, Rob Brennan, they should become a sponsor member of the Day Trader for tips on the YouTube channel. Really? Seriously? It's beyond words. I mean, when we had the IPO of Robinhood, I don't know if you remember that, they had no internet. They had no one managing the cameras. I was sitting here going, I've just invested in you guys. I love your platform. But some companies, you see, they are good at what they do, but they might have a really bad marketing department. But seriously, Netflix could employ me to go, Martyn, can you run our YouTube channel? And I could go, yeah, I can run it. I'll do it for free. It is funny though, isn't it, guys? Don't you think? $1 billion company can't run their YouTube channel. I'm mad. Anyway, it shouldn't even be on a YouTube channel. They should actually have a live broadcast and just call in like everybody else does. But anyway, they don't. So going back now to the shares, let's have a little look at what's happening. I will show you the overall markets as well as we are waiting for Netflix, because you have to wait for them. They go live when they're ready. You're just a shareholder, right? Or the subscriber, or not in this case. Anyway, Netflix, the overall portfolio is up today 4.61, looking pretty good. My overall portfolio, as you can see, is doing very nicely today. Everything's looking great. Netflix should do a song. If the price goes up 10% after hours, Netflix should do a song. Yeah. There you go. You can see a little red candle came in there for VU. That's VU. This is SPCE. There's their candles throughout the day. A little bit of buying coming in at the end of the day. Tesla. This is Tesla's chart today. Looking interesting. Big buy-ins coming in at the end of the day. Looking nice. So there you go. Anyway, we're just waiting for Netflix to start their earnings. Perhaps Netflix are going old school and releasing their earnings via VHS. Yeah. Seriously, though, I know we're joking, but if you were an investor, and I don't mean retail investors, I don't mean us guys with a few shares. I'm talking about millions of shares, or a director or an employee at Netflix. If you're listening to me now, do you feel embarrassed? You should feel embarrassed. You are a broadcast company. You make videos for a living and charge billions of dollars for the services. Do you not think your live presentation could be a bit better than this? I earn about $10 a day on YouTube, and I have a better presentation than you do. Is something wrong here? I'm going to start Netflix. There you go. Buy shares in the Day Trader, and every day I'll stream movies. I'll do a deal with a few people. I'll get some movies made. Rob Brennan, Neil Carver, Market Profit. Make me some movies. Send it in. I'll put them on a playlist. I'll make sure we post it properly, and you can tune in. And I'll charge you $1 billion for it. What do you reckon? You make it too easy, Netflix. You make it too easy. Anyway, I have to waffle because I'm waiting for you guys to post your video. It's not easy for me, you know. I have no idea when you're going to do it. Last time you did it, about half an hour late. Well, we're coming up to half an hour now, so... Oh, finally! Hurrah! Here we go. Is this it? Oh, no. I thought it was coming up then. No, it was 2 months ago. Yeah, it did this last time. They did a thumbnail of their 2 months ago one. I got all excited then. Did everybody get excited? I bet everyone got excited then for a minute, didn't they? Netflix is one trick pony. At least Disney have perks and Amazon sell stuff. That's it. That's why, Rob, seriously, you made some money today. Just take the profit, walk away. Be a subscriber to Netflix if you want, if you like the movies, but... That's what I'm saying. Disney, Amazon, Apple, they do so much more, right? Netflix don't do anything. They just stream videos and make really, 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 really bad YouTube channels with no information about when they're going to go live. But there you go. Netflix Investor Relations. Investor Relations. We can't be bothered to let you know what's going on. That's what we do. Investor Relations. We love our shareholders. We don't even let you know what's going on. We'll do when market opens. Good man. Just sell it. That's not financial advice. It might go to $1 million. What do I know? I'm just a guy on YouTube. Anything happens. Some people say I'm Satoshi Nakamoto. Some people say that. Any chance of Netflix reversing to 190? We'll find out soon. What do you think? J.Q. Lee, what do you think? Let's have a little look at the shares right now. There we go. It's going up again. 216. If you thought it was a great stock, you should have bought it before this. Obviously, it always rises into the earnings and then dumps, of course. Rob Brennan says their competitive advantage is gone. I would say Disney Plus and Amazon Prime's catching up. Even Apple TV, Amazon acquiring all the smaller sites like Hulu. Exactly. Amazon will own it all. Amazon deserve to own it. Netflix don't even run their channel properly. I mean, I wish they would listen. I wish they would tune in and listen to me. I would tell them. People can't follow your earnings report. It's flipping rubbish. Anyway, we got a good number of people tuned in right now. Thank you very much for tuning in. Disney has a strong brand, at least. Yes, it does. It has a strong brand, and Disney knows how to market things. Disney don't need me. Netflix, they need me, as do Robin Hood. And other sources of revenue, the theme parks, cuddly toys. Don't forget the cuddly toy. Now, I'm putting on a first-class show here. Appreciate you, sir. Jaku Lee, I appreciate you. Shall I give you a quick welcome to my studio? I'm Martyn Lucas, known as the World Piano Man. We're here to help people, support people. Let me give a quick look behind the studio. This is the Day Trader studio back here. Let's see, we've raised over $1 million for our charities in the studio. Let me give you a wave. All right. If you're a member of our channel, we do fundraisers for you. We raise money for charities. You get all the money. We do cash prize giveaways every Friday. We're here to help people. It's what we do. When are earnings announced? The earnings, of course, they presented the earnings, but this is the presentation. What they do is whenever they are ready, they go live on their YouTube channel, and that's when we tune in and watch. So we're waiting for them to update their YouTube channel, and it's what they do. So I'm looking at it right now. I'm refreshing it over and over again until I see the earnings report, and once it goes live, I will play it to you. But just in case you've missed the beginning of our conversation, I will share with you this information here. What they do here on their channel is they don't give us a time. They don't have a playlist. They don't have an upcoming live stream. They don't do anything. They just post it when they're ready. And they're a broadcast company, but it is what it is. They're only $1 billion company. They don't know how to do YouTube. Anyway, so we're just waiting for it, and there's nothing we can do until they decide to do it. And that is it. Okay, so should I have a cornetto or a fruit pastel lolly? What do you think? Should I have a cornetto or a fruit pastel lolly? Cornetto, definitely. What flavour cornetto is it? What flavour? We've got Mihai is here. We've got our new guest today, Jaku Lee. Jaku Lee, do you want to be in our cash prize giveaway? We do it every Friday. If you do, here's our free newsletter. It's free. Free to enter, free for all. You never get any spam. You just got to click on it, verify your email. That's it. I want no information. You haven't got to pay for anything, nothing. And you'll be in our weekly newsletter All right, go into your junk box, because when you get the verification email, because I do cash giveaways, it always goes into the junk folder. Everyone says that all the time. The email you're looking for is thedaytrader@martynlucas.com. There you go. Very, very easy. Original, I think. Oh, can't go wrong with that. Can't go wrong with that one. Rob Brennan. Can't go wrong. Netflix is starting to pop up a little bit. I'll show you again. There you go. Interesting. But we're just waiting for the... right, it's 4 o'clock now. We're waiting for the video to post to their channel. We keep refreshing it. It's all we can do, guys. And when they post it, they post it. All right. So in the meantime, you are listening to me trying to fill the gap for Netflix. I'm like the understudy for Netflix. That's what I am. That's what I do. Oh man. Anyway, it is what it is. So. We're just waiting for Netflix to report and bring their presentation. And that's what we're waiting for. All right? So if you just tuned in, give us a subscribe and ring the bell. We appreciate it. And give us a thumbs up as well. There you go. Always nice. Okay. We're just waiting. All we can do is wait. There's no other way around it. There's nowhere. It doesn't appear anywhere else. It is what it is. And it will go live when they're ready. I'm just looking back on last quarter's earnings and seeing when it started to give you an idea of how long we had to wait. All right. So I'm looking back on the last quarter. Okay. Just trying to find it a second so I can share with you how long we had to wait last time. Let's have a look. We're just waiting. As soon as it comes live, I will bring it to you. You won't miss it. You know you're in the right place. Let me know you're here by going into the chat. Always nice to know who's with me. We're just waiting for it to pop up. And they normally present it at the end of the day, which is now. And it should be with us very, very shortly. Netflix earnings. We're just waiting for it to come out, guys. Thank you very much for tuning in. We're waiting for the presentation to begin. And all we can do is wait until they're ready to post it on their channel. So we're just waiting now. All we can do is wait. Please bear with us. And when we get it, we get it. Nothing we can do until then. It normally comes around about this time. And I keep refreshing the screen until we get the earnings. And when we do, we do. Sorry I'm late. Did I win the draw? You're very patient, Martin, man. Well, you ain't got much choice, have you? You haven't got... What can you do? What can you do? You've just got to have patience and wait and in the end go, well, that was a waste of time, but that's all you can do. That's all you can do. And we have to wait. But you know, my commitment is to my audience here on The Day Trader. That's what I do. We're looking at the share price going up. Of course, the market's open for another few hours yet. We've got plenty of time, but we shall see where this ends up. I'm trying to look back and find. Here we go. Find the earnings report for last time. Here we go. This was last quarter. I want to see how it was done. How long we had to wait last time. Let me have a look. It appeared on their YouTube channel around about this time. There it is. Okay, I can see it. I'm looking at it right now. Okay, I actually cut it so it doesn't give me free money. Free money. Sorry, I'm late. Free money. What's the free money for? Yeah, we're giving away money tonight. We're just giving away money. Here's the Netflix. We're just waiting for them to go live. They go live when they're ready. Let's refresh it again. Any minute now. It's like they do an internal broadcast or something like that, maybe. Then they should share it. I don't know why. I messaged them and asked them, and I don't get any response. Anyway. Let's have a quick drink. We're still waiting. I could do a little jig if you want, a little dance, trying to keep everybody entertained if you want. But yeah, it's very exciting. Netflix is going up again, so there's some action going on in the after hours, but there you go. We're just waiting. Netflix up pretty good right now. It is indeed. Netflix are looking pretty good, no question about it. It's up pretty good, but I think it will pump and dump though. How's Space doing? I will share with you Space. Okay, let's have a quick look. Just to spice things up a little bit. There we go. SPCE in the after hours. Let me give you the actual share price. Bear with me. Here we go. It's actually very, very slightly down in the after hours. Very, very slightly down. Not much at all. I thought I bought 10,000 worth of Netflix, 192. Wow. There we go. $10,000 worth of Netflix, 192. So you've made some money. No question about it. You like living on the edge, don't you? You like living on the edge. No question about it. Anyway. We are waiting for Netflix to report. All we do at this stage is just wait for them to give you the start the video. I can give you the link to the report and I can share with you the report on the screen if anybody would find that useful. But in fact, no, I can't actually. It's an XML file, so it's not a Windows file. Do the So, bloody hell! What's it come to? What's it come to, folks? Eh? Seriously, nice. I'd put a stop loss in. Yeah, I would. That's the way to do it. Mozart is here. Moose, how are you, Moose? Lovely to have you here. Here he is, the man, the myth, the legend, my mate, our gold member, our original member. What can I say? He's like everything. This guy's got all the awards. He's got all the awards, he has. He's got every award there is. He's gold. He's amazing. He's brilliant. He's everything. Moose. He treated everyone to mugs once upon a time. That was a lot of fun. He's brilliant. Oh, by the way, while you're all waiting for the fun and excitement to begin, all right, for Netflix to finally post. We missed you all, mate. Yeah, where you been? What is going on? You're not prioritising us anymore. You're prioritising other things. You got to prioritise us, right? You got to prioritise us. We're looking at Netflix. Netflix is doing all right tonight. Well, it's doing better than all right. It's doing great. In fact, no, it's. In fact, I wouldn't say it's doing great, to be honest. I know it's up 7%, but it's crashed down nearly 100%. It's not doing great at all, if I'm honest. I can't trade until market open, Fusion. Yeah, what I would do is set a stop trading loss. Set a stop trading loss of something like 2%. So you've got a little bit of movement, but generally speaking, it will drop a bit and sell it. You've made a profit. If it does trail up, you trail up with it. If you set a stop loss, it'll just sell where it is. Whereas I would give myself a 2% swing. So if it does drop 2%, so what? You still made money. But if it does allow it to ride and it will follow it up, that might be a good way to play it. But again, what do I know? Just a guy on YouTube. You can't trade in after hours. No, he can't. He doesn't. They don't let him. He's not important enough. He's not important enough. That's why. So he's not as important as me. They only let me trade after hours because I'm special. I'm the only person who's allowed. Everybody else, no one else can do it. All right. Look at our portfolio, folks. I'm going to share with you. Look at this. The overall portfolio is up again. Look at this. Brilliant. I'm up nearly 5% today. And if that was just today, you could go, okay, whatever. But look, over the week, over the month, 17% up in a month, right? It's good. Good. It's really good. But of course, we're working on the 3 months down. And remember, 3 months down, we were down over 25,000. We've gained 10 grand in the last few weeks. It's good moves, right? If you look at the how it's turning around, this is my entire portfolio, how it's been. But remember, like I said before, here, let's say I owned 100 shares here. I now own 10,000 shares here at lower prices. So when things do turn up, and they will, because what comes after the rain, the sunshine, eventually, this will go up so much quicker. This took a year to get. This, from here to here, could take days. So I'm not at all concerned. I'm very happy. I own much better shares, much better companies, more of those companies, and so on and so forth. Anyway, let's get back to our Netflix drama and chaos. And we're waiting for Netflix to finally put their video on their channel. They obviously don't believe in customer service. They obviously don't believe in, going on time for an earnings report. They never have done. They just post it when they're ready. That's how they do it. And it is what it is. Anyway, the issue of putting a stop loss in, if you can't trade after hours, if the stock goes down in after hours, say $100, your stop will trigger tomorrow at the price, not where you put it in. That's right. So, got to be careful with that. Netflix will probably wait until after 6, so it won't dump as hard after hours. Yeah. Hang on, boys. Don't put that video out yet. Hang on a minute. Let's keep this going a minute, boys. Right? I tell you what, put it out just as the market closes, so I can sell all my shares and get out of it. That's what you want to do. It's terrible. I can't trade in pre-market either. You should, Rob, call up your brokerage and say, I know Martyn Lucas, the day trader, and he's this massive YouTuber, and he said that you can help me out. All right? I was so tempted to buy Netflix calls and chickened out. Hey, look, at the end of the day, Moose, you've put your money somewhere else, right? You've put your money somewhere else. Does it matter? Does it matter? You've only got so much money to make so much money from. Buy something else. There's loads of things to make money from. Doesn't matter, does it? Do you really want to? I mean, I buy stocks of companies I want to own because I believe in their CEO. I believe in what they're doing. Who cares? If you make money on something else, you should buy shares in the day trader. Oh, hang on a minute. You have, don't you? You're a gold member. You have got shares in the day trader. I forgot that. Right. Right, we've got 30 people watching. They're waiting for the Netflix earnings to start. So stick with us. You'll get it as soon as it goes live. And if you've just tuned in, subscribe and ring the bell. We go live every day, 10 hours a day. We're always live. It's like I'm the craziest lunatic on YouTube. I'm always live. Right, come on, everybody. I'm going to put a 1 minute on the clock. I've got 19 likes, and we've got a lot more watching. So smash the like button, guys. I'm going to put a timer up. I'm going to put a 1 minute clock up, right? And I want to get at least 25 likes. If we don't get 25 likes, I'm going to ring up Netflix and cancel the earnings report. And I can do it because I can cancel their YouTube show. You ready? All right, let's do it. 1 minute. Smash the like button, everybody. Here we go. Here we go. Smash the like button. Here's Mr. Mini-Me. Here he comes. Here he is, look. Chicky, 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 ba ba. Chicky, 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 ooh. Would the real Satoshi please stand up? Here he is, Baby Yoda. We've not seen Baby Yoda for a while. I'm Martyn. I've been out of Inter for 3 months. Been a big cruise. Been on a big cruise. Glad to be back here. There he is, Baby Yoda. He's a legend. One of our original guys. He's back. Smash the like then. Smash the like. We've got 42 people tuning in now. We've got the earnings report about to begin. It's getting very, very exciting. Very, very exciting. I can't even contain myself. Smash the like button, everybody. Here we go. Let me end it. Let them go out of wherever they put their finger and get on with it. All right. They do this every time. You ready? Here we go. Yeah, there we go. That's much better. All right. The Netflix is going up right now. But we're still waiting for them to start reporting, and they are the worst earnings report company in the world, because what they do is they put it on their YouTube channel. They don't tell you when. They don't give you any information, and they just post it when they're ready, because they're Netflix, the only company who treat their shareholders like this. And they never listen to me. It's ridiculous. The whole world now is searching for their earnings presentation. And they do it when they're ready. And they normally do it any minute now. We do have to wait. It's what they do. But what can I say? It's Netflix. They are a broadcast company. They know how to broadcast. Except they don't. Anyway, there it is. We have to wait. 35 people now tuned in. Thanks ever so much, guys. Smash the like button. If you smash the like button, they might actually post. I'm just saying they might. They might do, you know. Anyway, we're just waiting. And they'll post when they're ready, and not until. And in the meantime, I have to talk to you guys and entertain you while Netflix get ready to give us their presentation. They don't mind me talking like this. If they did, they'd fix it, but they don't care. All right, Netflix earnings live debate is coming up very shortly. I just have to wait. I'm going outside and watch my lawn grow for a bit. Be back maybe later. Good luck, Rob and everyone. Yeah. They take forever. They do. 999 keys. They are terrible. They are the worst reporters in the world. They don't care about the investors at all. They don't know how to run a YouTube channel at all. Terrible. But it is what it is. We tell you the truth here. We're not interested in giving you any nonsense. We just tell you how it is. Everyone's searching for the Netflix earnings, and you can't get it. I bring it to you first. Everybody else is exactly is the same. All right. Am I the only one using? Are you the only one using Trading 212? I prefer Robinhood. Robinhood is the account that I use. It's the only account that I use. And yeah. Zane Harrington. Hey Rob, I'm 18 and now I have some money invested in Netflix, and I've gained some money today, and I'm very new to stocks. Do you have any tips for someone new? There you go. Zane Harrington, welcome to the Day Trader. We're live every day. I'm known as the World Piano Man. This is my TV studio behind me. We're waiting for the Netflix earnings to begin, and we just have to wait because they don't announce it. They don't have a schedule on their YouTube channel. They don't have a clue how to run their YouTube channel. That's why I'm not an investor in Netflix right now, because they don't do anything proprietary. All the other broadcasting companies do a better job. Amazon, Disney, Apple, they know how to promote, market. I'm afraid Netflix have no idea. And if you don't know what I'm talking about, I will share with you their YouTube channel, which is where they put their Netflix broadcast. This is where they put their earnings, here. And they don't have a playlist. Look, nothing in the playlist. They don't have anything in there. They don't have upcoming live streams like I do. They don't tell you when it's going live. They don't schedule it. You just have to wait. It's how they do things. They do it every quarter. It's why everybody's unsubscribed to them. At the end of the day, they only have 15,000 subscribers on their YouTube channel. I've only been going a year, and I'm only a tiny little channel, and I have a third of that. But anyway, the reason why I don't invest in Netflix is because I watch Netflix, I subscribe to them because I like the programs they put on. But if they disappeared tomorrow, Amazon would take over and put them on their channel. Makes a difference, right? As long as the films get made, it doesn't require Netflix to do it, or Disney or Amazon or Apple or anyone. I only invest in companies that do things proprietary better than anyone else, and something that no one else can do. And Netflix don't do any of those things. Okay, but we do like to watch it and follow it because it does play a part in the S&P 500. It does drive my overall portfolio up because I own the S&P 500. So there you go. This is Netflix right now. We're waiting for them to present. If you've just tuned in, subscribe, ring the bell, let us know you're here. Thank you very much indeed. Tesla is one of my favorites, absolutely. If you want to see my portfolio, I'll share it with you right now. Look, here's my portfolio, and I'm up 5% today. I'm up big time on the week, the month. This is my position. These are all my shares. This is my real money. When I trade and invest, I share with everyone my real trades, my real money, my real positions. This is my real shares, my real money. Here's my portfolio. I'll share with you all of my money. This is it. I don't do things like Netflix. Everything is open and above board. Here's my real shares. Here's my real positions. And I'm always bullish. Why wouldn't you be? Why do you invest in stocks you're not bullish in? I don't... Even though I understand charts very well, I don't use charts to trade. I understand the CEO, the company, the products. That is how I invest. And I only buy companies I believe in, and I could walk away for 6 months and my portfolio would be up. That's how I invest. This is my portfolio right now. And as you can see, it's looking fantastic. I'll definitely check into your lives and subscribe. I really appreciate it. Zane, you're very welcome. I've raised over $1 million for my members in this studio. I'm the world piano man. I performed in 195 countries all over the world. This is my TV studio behind me. Look. And here in the studio, we've raised over $1 million for our members. We do cash giveaways every Friday. We have a Twitch channel where we give away a prize every first Friday of the month, and it's free to enter. You just have to subscribe using your Amazon Prime, which is free, of course, and you will be. Let me give you a wave. All right. All right. There we go. Let's get back to our earnings again. Here we go. And we're just waiting for Netflix to go live, and as soon as they do, we'll bring it to you. All right. And we keep refreshing the screen until they do. And any minute now, they'll go live. This is when they do it. They like to record it and then post it. I don't know why. Just how they do things. NASDAQ, I'll definitely check it out. Well, great. Click subscribe, ring the bell, and give us a thumbs up as well. That'd be awesome. Now, if you want to be in our, if anyone's watching right now who wants to be in our prize cash giveaways, we have prize cash giveaways all the time. Every Friday, we have cash prize giveaways. We've got 3 this week, completely free. Doesn't cost you anything. And we have a newsletter. Do you buy options ever? No. Don't believe in options trading. I like to own a piece of the pie, and I own it regardless. And that way I don't have to predict the future. I know the company is going to do well. Why would I buy shares otherwise? And, you know, anyway. If you want to be in our free prize draw, we do it every single Friday. Here is the weekly newsletter that you subscribe to. It's free. We don't charge you anything. We don't spam you. We don't send you any nonsense. We don't share your email. We don't ask for your name or information, just your email. When you click on that, it'll bring you to this page here. You put your email in there, and because it contains cash giveaways, which we do every Friday, sometimes it can go into your junk folder. So what you do is you verify the email and you're looking for this. So search your junk box for my email. And my personal email is thedaytrader@martynlucas.com. It's in the chat right now. There it is. All links are below in the description. Verify your email. And every Sunday every Friday we do cash giveaways. Now, if you subscribe to me on Twitch, where we are live right now, we're live on Twitch. I'll show you. Look, we're live on Twitch right now. There we go. And there's my subscribers. You can see there. And if you subscribe to me on Twitch using your Amazon Prime, it's free. And we do a giveaway, a cash giveaway and prize giveaway every first Friday of the month. You don't have to watch me on there. You just have to be a subscriber, and that's free as well. On the 4th of August, after hours for SPCE, we're giving away $100. $100 cash prize free in the after hours earnings of Netflix. Sorry, of Virgin Galactic. Completely free. All right, it's in the newsletter with my stock tips and everything else. I never sell you anything. I don't want any information from you. I don't sell any Bitcoin to you. I don't want your WhatsApp, your Telegram, none of that stuff. I just go live all the time to show you that this is real and genuine. I'm just like helping people. That's it. Now then, if you are a subscriber to the newsletter, but you missed this week's because a few people didn't receive it because I had to upgrade my amount of emails I can send. I have now upgraded it. Then here is the newsletter. This is the web version because some of you didn't get it, and I don't want you to miss out on the cash prize draw. So there is the web version in the chat for you right now. Okay, we're just waiting for Netflix to go live with their presentation. They're always late. They don't advertise the time. They don't do a playlist. They don't let you know when it's going live. We just know it's around about now. It's just the way they do things. It's how it is every quarter. And all we can do is refresh the screen. And when they go live, we'll bring it to you. I'm just refreshing it again now. No, they haven't gone live yet. When they do, I shall bring it to you. And there's nothing we can do until they decide to post it. It's called Netflix Investor Relations, except there's no relationship. There's none whatsoever. Anyway, we are watching and waiting. We'll bring it to you as soon as we can. If you've just tuned in, thank you very much indeed. Here's a quick commercial break. Skip the ad. Stay with us though. Here it comes. Okay. We ought to go till morning. Yeah, just keep going. Just stay live 24 hours a day. What the heck? I won't live. I won't breathe. I won't eat. I won't sleep. I just sit here. Like Netflix. Just, 24 hours a day. Anyway, it is what it is. We're waiting for them to report. The overall portfolio is looking good. Robbie Cooper is here. Good evening to Robbie Cooper. How are you? Lovely to have you tune in. There is Netflix chart. The volume is slowing down because we don't have any information. As you can see, it's up today. They've lost 1 million subscribers, not 2. So that's why it's up. They were expecting to lose 2. They've lost 1. People regard that as good news. I guess it is. Of sorts it is. But there you go. If you're interested in my portfolio, this is my actual position right now. I'm up 5% today. Looking very, very nice indeed. And all good. If you are, let me see if anyone just subscribed to my newsletter. Let's have a look. 114 people have now, with 86 verified. Let me have a little look, see if it's gone up during the show. 114 and 86. I'd like to keep an eye on it. Okay. Let's have a little look. Let's see if it's gone up. We're waiting for Netflix to report. As soon as they do, I'll let you know. We're waiting for it now. All we can do is wait until Netflix are ready to go. Let's go back to Netflix logo a minute, and I can refresh the screen again. Let me take you over here. If you've just tuned in, welcome to you. My name is Martyn Lucas, the Day Trader. I go live every day here on YouTube, and we cover all the live reports. I trade live throughout the day, and that's what we do. We're waiting for Netflix to update their YouTube channel. And when they do, we'll have the information. We've been going now an hour waiting for their earnings report to start. It's getting worse every quarter, it appears. Thank you ever so much, everyone who's subscribed to my channel during this broadcast, waiting for it. And we're just waiting for them to go live. All we can do is wait, and that's exactly what we're doing right now. Thank you very much for sticking with me, all my family of investors and traders. I really appreciate you enormously for having the patience to stick with me. and all we can do is wait for them to present their video. They don't tell you when. They just do it whenever they're ready. It's normally come by now, if I'm honest. Last time we were in, did I miss the earnings? No, you didn't. No one can find the earnings. No one can. No one can find it. I can bring it. I will be bringing it to you first. There's no one in the world who can bring it to you first, because they get tired and give up. I never give up. I never give up. I know where it's going to be. I know I know where it will appear, and it will come when they're ready. And that's how they do things. It's just the way it is for Netflix. It's the worst company in the world for their earnings presentation. So much so, I might not do it next quarter, because they do. Last quarter, I was an investor. I'm not anymore. Because of this. They run their company like Jack the Lad, and I think it's very disrespectful. Anyway, is this the earnings for 2022 or 2023? Robbie Cooper, yeah, I think your hair has grown a bit. And yeah, it probably has. It probably has. It's unbelievable. Yeah. You're not going to get, if you want the earnings report, you're not going to get it from anybody else any quicker. I can promise you that, because I know exactly where it is, when it appears. Well, I don't know when it appears, but it's any time now. This is the third time I've reported on it, and they do this every time. All of a sudden it will start, and when it starts, I can play it, and I can go and take a cup of I can disappear and have a cup of tea. But anyway, it is what it is. If we look at the share price right now, Netflix has gone up a bit. It would do a lot better if anyone could hear them speak, but they like to keep themselves private. You can see we've still got some trading left, of course. We've got a couple of hours of trading left. Some people have suggested maybe they'll post the video right at the end of the day. No, they don't do that. But yeah, it does sometimes make you think, doesn't it? If you want a quick update of my portfolio, I will share with you where I am right now. I am actually up 5% today. I'm up on the live position. There you go. I'm up on the day position. This is my real money, my real shares. And I am also up on the week. And I'm also up on the month. And it's looking very, very good. 17% in a month now. Now we're trying to get back. The next one to tackle is the 3 months. As you can see, we're down $15,000 over the 3 months, over the year, all the inflation. But as I said before, I am in much stronger position now. I own more shares than I've ever done, at lower prices than I've ever done. I used to own 15 shares, if you remember, of Virgin Galactic. I now have 1,400. So when things pick up, boy, I'm in a position. And I expect my portfolio to go to 200,000 by the end of next year. That's where I expect to be. Okay. We're waiting for some big news as well. Google is up 0.62 in the after hours. Netflix, we're still waiting for them to report. And all we can do is wait. There is nothing you can do. I will bring it to you. Netflix is up 8.1% now. And the after hours, it's doing well. And Netflix, we are still looking for their report to present. Still no videos. But there it is. We're just waiting, and we'll continue to wait until they're ready. And we'll go through to 5 o'clock, which is another 20 minutes. If they've not reported at that point, then we'll give up. All right, because there's no point in sitting here forever. But they've never not reported. I will tell you that now. They're always late, but they've never not reported. They might be the worst earnings report company in the world, but they do report at some point. Anyway, what can you say about it? Thank you for those of you that subscribe to this broadcast, waiting for the earnings. I appreciate it very much indeed. And there's a thumbs up to you. Thank you ever so much. Or give me a thumbs up. That would be good as well. Okay. Keep refreshing the screen in case you're wondering. I do it every 30 seconds. I'm always looking for the updated information, and as soon as they present it, you will have it. And this is where it will be. I'll just share with you. This is where it will be. It'll be here at any moment now. That's where it will go live, and when it does, I shall bring it to you. In the meantime, we'll keep our eye on the stock price, and you can see it's climbing steadily. And thank you ever so much, everyone that's tuned in to Netflix. It's important to me because it's part of the S&P. It's not actually a great company at all. Its presentation is awful. Its marketing is terrible. It doesn't do anything proprietary. I heard they are currently buffering. Buffering. Martyn and I have decided I'm going to use my eToro account for trading, and then my free trade account for long-term investments, rather than struggling to pick one. Okay. You got to do. I mean, you'll be successful trading and investing if you love the app and you love how you trade, because then you're calm. Then you're happy you have patience. You don't get stressed. You enjoy trading. That's what it's all about. Hopefully I can start funneling trading profits into my long-term investment account. Yeah, I hope so too. For me, I'm waiting for Robinhood to start bringing out like a Roth IRA or whatever. They are looking at products like that. I can move my stocks that are doing well or whatever and so I don't pay tax. I'm just waiting for those new products and services to be announced, and they are working on it. I think it's just better for me to separate the two. I think you're probably right. I would like a day trading channel purely for this show. My long-term investments and my day trading separate, I agree. But I only like trading on Robinhood. I don't like eToro. I don't like Webull. I don't like Schwab. They overcomplicate things, and the presentation is awful. I don't like it. Robinhood's got it perfect. I wish they could give me two accounts, but they can't. I spoke to them, and they said, no, you can only associate one social security number, or in the case of the UK, national insurance number, with an account. You can't have two. I'd have to have, like, Leah's account. My wife, I'd have to use her social security, but then it would be her tax bill. So that's not really the way to do it. But anyway, I think if I sell space and then reinvest into it, then there's likely a rollover relief and I don't get taxed. I can't comment on that. I don't know. I only learn from experience, I'm afraid. So I don't know the answer to that. Anyway. We keep refreshing the screen. And all we can do is keep waiting. I keep refreshing it. It keeps showing me the videos from last year. And that's all we can do right now. Trying to see what time they posted this video, last quarter's one, if there's any information. But it doesn't show me anything. There's a share pool matching rules or something that I learned into my accountancy studies. I have to brush up through a tax compliance is the exam. One failed by 1 mark. Okay. Yeah, well, if you know anything, let me know. I'm trying to get information here from when they actually posted this video last quarter. Here we go. July 19th. Here we go. It was posted. This video was posted last quarter. I've done some investigative work here. July 19th. Oh, hang on. That's now. Okay, no. I'm looking at this video and it's not telling me when it was posted. No. I wanted it to tell me when it was posted. It tells me April 19th, but it doesn't give me a time when they actually posted it. And of course, they have their comments turned off as well. So no one can comment to their channel, which is, well, silly, to say the least. But unfortunately, no, they don't. I used to be Robinhood before they changed clearing companies. After they switched, it became harder to get order fills. I really like Webull for stocks, but I have a cold wallet for crypto. I have a cold wallet because with Robinhood now you have your own wallet for all your assets. You can transfer all your crypto onto a ledger, which is what I use. So that was one thing that people didn't like with Robinhood. Well, you can transfer all your assets onto, well, all your crypto assets, that is, onto your ledger for free, instantly, simple, easy. Anyway. Okay, I said we'd go through till 5 o'clock. That's what we'll do. And we're still waiting. Their presentations are around 40 minutes, 45 minutes long. And we're waiting for it to be posted. Nothing we can do until it's posted. And I will be the first to bring it to you. I can share with you now the portfolio, which I have a big position of the S&P 500, and Netflix is part of that. Even though I don't directly own Netflix, I won't buy Netflix directly because they don't manage their company very well. Their marketing is awful, and their YouTube channel is terrible, and it can be fixed for like 5 minutes, but they just don't. I don't know why. You can see I'm up 5.09. The markets are still going up. If you look at my VU right now, it's up in the after hours. SPCE is down very slightly in the after hours. Tesla, tomorrow we report on Tesla. They know what they're doing. They don't have any problems. They report great. Elon Musk is always great. He's always entertaining. He's on tomorrow night, straight after the show. So let's get you all queued up for that, shall we? As you're all here right now. Are you holding lit? Yes. Haven't seen a flash across the screen price last week. Yes, I hold lit. I do. I do own lit. You're absolutely right. I do own lit. Yes. So, tomorrow night is Tesla in the after hours. We'll be covering it for you. We're still waiting for Netflix to report. When it does, I'll bring it to you. Can't do anything until they report. They post it to their video YouTube channel, and we're going to go through until 5 o'clock today, and then we'll have it. Okay. What does it mean if a penny stock goes up 30% and then back down 30% same day, as XELA did today? Can you talk a second about how that happens if you have time? What does it mean if a penny stock goes up 30%? I don't understand the question. Any stock can go up 30%. A penny stock is purely a stock that's under $5. That's all. If it's under $5, it's regarded as a penny stock. It can be a penny stock all the way from $5 down to $1. 1 cent, 1 penny, if you like. What does it mean if it goes up 30%? Well, if it went from $4.99 to $6, it wouldn't be a penny stock for a moment, would it? It wasn't 1 billion volume. It was 800,000 or something like that. It was 800 million. So it was short of a billion. I don't know who's spreading the information about it being a 1 billion volume. It was 800 million. 850 million. So it was nearly a billion, but it was 150 million away. So people are exaggerating that a bit. It wasn't 1 billion. It's 850 million. But anyway, no, that's fine. No, you don't have to apologise. I've actually seen it all over the internet. People saying it's done 1 billion. It's a good headline, but it's not actually true. So all that it means for a few moments, if it had gone over $5, it wouldn't be classed as a penny stock. That's right, but you're not a penny stock if you're above $5. That's it. Actually, I have 955 million currently in the after hours. Okay, there we go. It's gone up slightly more. I actually saw it up to 850, so my information is slightly out of date. That was at the closing bell. It's now 955 million. Yeah. But the stock hasn't done very much, and it's gone back down again, so it's not really that exciting. Yeah, it doesn't do anything that excites me, honestly. So I don't like following a trend. If you like trending stocks, things like DWAC, Donald Trump's media company, that's up and down like a casino. I don't think that's investing. I think that's just gambling. I don't like any of that kind of stuff, but some people do. Try and tell somebody who's made money on anything that it's a bad idea. I mean, they'll never listen to you. But you got lucky. I mean, is it an investment because you got lucky? I don't think so. But someone who made money on something that went up will never see it as not a good investment. Do you follow Veru Inc? No, I don't. Veru Inc. I don't even know what it is, if I'm honest. I don't even know what it is. So, no. We're still waiting for Netflix. I'm going to give it another 5 minutes. I'm not going to sit here all night. I will give them some time, but they've had more than enough time. Everyone is talking about market manipulation. Shouldn't it stay trending up, or is it just being used by big money to take advantage? Okay, all right. What is market manipulation and dark pools? It could be more specific about. Okay. And Netflix earning presentation is at 6:05. Okay. Still got 6 minutes to go, buddy. All right, John, David, John. Thank you so much indeed. All right. Thank you very much indeed. I will stick with it. Thank you very much, John. Market manipulation. Okay. So the market is run by market makers. Okay. You and I are retail investors. We're not institutions. We don't have inside information. It's illegal anyway. We are just retail investors, small time, at home investing, right? Even if you invest millions of dollars, you are a retail investor at home doing your thing. You will never get the information ahead of time unless you work for the company, and that's called inside trading, and that's illegal anyway. All right? You can't beat the market. It's called timing the market. You can't beat it. I don't try to. I just invest what I believe in, good companies, good CEOs, and that's it. Okay? At the end of the day. Market manipulation is when the market makers cloud the truth with untruths, okay? What I mean by that is you look at level 2 data and it's supposed to give an indication of what the markets are doing, but it's manipulated. It's hard to see it. Market 2 data is what I get with Robinhood Gold, and it will tell me what the orders are. The orders are people buying in and selling out of orders that are placed. And you look at it and you go, wow, look, everyone's placed orders at a certain price, or everyone's put orders to sell at a certain price. Trouble is, it's not accurate information. Level 2 data is very basic for retail investors. It looks good, you like it on your app, but it's not the full picture, and it's very difficult to read. And I've looked at the data and it says, look, everyone's buying, so I should buy because obviously it's going to go up in price. Remember, stocks go up when people buy, stocks go down when people sell. And it's never accurate. You think a stock's going to go up and it goes the other way. So I don't even use market data. I look at the CEO, the company. Why did I buy in the first place? I don't follow the trend. As Warren Buffett, Elon Musk say over and over again, we live in a world now where everybody wants to get rich for doing nothing. Everybody wants to get rich for doing nothing. They want to buy an asset on crypto and get rich. Well, yeah, we all want to get rich. But I will sit here, as you know, for hours and hours and hours, building and investing in myself and trying to grow the best YouTube channel in the world. I will work hard, limitless patience, limitless amount of work. I don't believe in getting rich in 5 minutes. That's just merely gambling. And those people are like building their houses on sand. They fall over very quickly. Whereas if you build on concrete that goes to the center of the earth, you'll always win long term. And long term is what it's about. I'm investing here, so in 15 years, if I want to retire, I may never retire, I don't need to, right? I could do this forever. I will have some money and, I'll be all right. So I'm not investing for the short term, long term. So I don't really care about market manipulation. I don't really care about what people say or trend. I know what I believe. And I don't just believe because somebody told me to on Twitter or Reddit. I'm not influenced by the market. I don't sell out when everyone else is buying. I do the opposite, in fact. I've been buying all the way down these markets. I've been buying great companies. So market manipulation is when people are trying to drive a stock down or drive it up for their own short-term gains. Distance yourself from that. Let them play around. Let the stocks come to you. Decide what your objectives are. Decide what it is you want to achieve. How much money do you want to make? Where do you want to go? When do you want to do it? How do you feel about a stock? I only invest in money that I don't need. I've already paid my mortgage off. The first thing to do, if you're going to start investing, is pay your mortgage off, pay your credit cards off, pay your car loan off. Then work, go to work at McDonald's, work anywhere, make money, and then invest your profits and make money from your profits. All right, apparently we're about to go live with Netflix right now, so we're going to run a very quick commercial break. Here comes the ad. When you see the ad, just skip the ad and you can be back with us, okay? Here comes a quick ad. We're going to go live. Apparently, they're going live. Someone just told me right now, so we're getting ready for it. Here we go. The markets are up. Netflix, we're going to refresh their screen again. Let's see if they've posted their video now. Let's have a look. We're waiting for it. Will it come live now? Okay, so it looks like they are about to post because last quarter has just gone 3 months. So obviously they posted 3 months ago at this moment in time. So that means they are about to post. That means they are about to post. So you are in the right place. I will bring it to you as soon as it comes. You are in the right place. This is where it will go live. You can see it says, here we go. We're going live right now. We're going live to Netflix. Here we go. We're going to listen in. Here we go, folks. You've waited. Your patience now will be paid off. And here we go. Stick with us. We are now going live with Netflix. Here is their earnings report. You've stayed with us all this time. Here we go. Here it comes. No views. I'm the first person to watch it. Here we go. Okay, you ready? Okay.
Good afternoon, and welcome to the Netflix Q2 2022 earnings interview. I'm Spencer Wong, VP of IR and Corporate Development. Joining me today are co-CEO Reed Hastings, co-CEO and Chief Content Officer Ted Sarandos, COO and Chief Product Officer Greg Peters, and CFO Spence Newman. Our interviewer this quarter is Doug Anmuth from JP Morgan. As a reminder, we'll be making forward-looking statements and actual results may vary. With that, I'll turn it over to Doug now for his first question.
Great. Thanks, Spencer. Great to see all of you, and thanks for having me host again today. So there's clearly a lot to talk about on advertising and new initiatives, but let's start with talking about recent trends. So you expected to lose about 2 million subscribers in the quarter, and you did a little bit better at a loss of 970,000. What drove the slightly better than expected results in the quarter?
Yes, we are live now. We're all good.
Quarter, Doug, we're executing really well on the content side. Obviously, Ozark, Stranger Things, lots of titles, lots of viewing. We're improving the everything we do around marketing, improving the service, the merchandising, and all of that slowly pays off. If there was a single thing, we might say Stranger Things. But again, we're talking about, losing 1 million instead of losing 2 million. So, our excitement is tempered by, the less bad results. But, looking forward, streaming is working everywhere. Everyone is pouring in. It's definitely the end of linear TV over the next 5-10 years. So very bullish on streaming. And then our core drivers are just continuing to improve. And then, of course, we'll talk later in the call about monetization and how that's improving. So, tough in some ways, losing 1 million and calling it success. But, really, we're set up very well for the next year.
And Doug, I just add to that. I mean, the business remains really resilient. I mean, basically, what you see in the quarter is it played out generally as expected, as Reed said. So the -1 million versus -2 million, slightly better in terms of member growth. And then on revenue, operating income, cash flow, other than the strengthening US dollar, which I'm sure we'll talk about and affects multinationals around the world, our revenue was in line with guidance. If you adjust for that and our restructuring costs, our operating income was above guidance, our EPS was above guidance, and our cash flow remained strong. So overall, generally delivering on as expected.
So almost all of the subscriber base has seen a pricing change over the past year. How do you think about that in terms of a factor, just perhaps in 2Q and maybe even going forward, just in terms of gross ads or churn? I think you still have perhaps some rollout in UK and Ireland, and maybe the tail to 2Q in the US.
Maybe
That's right.
Oh, go ahead, Greg, and then I'll check.
Okay, yeah, I'll kick it off, and then you can take it, Spence. But I would say most of what we've seen in the countries that you mentioned are the big ones that we've done so far this year: US, UK, Ireland. We've seen pretty much the standard response that we've seen historically over the last 5 years or so, which is that we typically have this adjustment period where there's slightly higher churn post the price change. And that's certainly what we've seen in those countries. But then if we do a good job, basically, at taking those price changes, which are significantly, net revenue positive, and investing those into more great content and the product experiences and marketing and magnifying the conversation around our titles, then we know that we'll deliver more entertainment value and we'll be able to return.
So-
Yeah, Greg, you hit on it in the end. Like US, UK, Ireland, some other parts of EMEA early in both Q1 and rolling.
Bear with us, guys. We have a slight technical problem. Just bear with us, guys. We have a slight technical glitch right here at the end. Let me see if I can fix it. For some reason, we've lost a couple of things here right at the end of our day. We apologize. We are seeming to get... Right now, we're getting some issues. I apologize for this. I can't get... I do apologize, folks. We've got a slight technical glitch here right now. I don't quite know what's happened. Let me just see if I can... I don't know what's happening here. Why I'm getting so many images coming up here. We seem to have a technical issue this evening. Let me see if I can get it back. You won't lose anything. I just need to correct the screen. I don't know what has happened. We seem to have lost something here. After all that time of waiting, as I do apologize. Okay. Okay, now then. Where is the... Let's see if I can get this back. Oh, flipping heck. What on earth? I don't know if you've lost me. I am here. I don't know how I can get this back now. No, you're still here. I'm still here, but I can't see where I am. We still see you. I can't see you. I've completely lost control of the system. I don't know how to get it back. I have no control over the computer. I don't even know where you are. Okay, this is, I'm trying to get it back, but we have lost all kind of effect right now. Oh, hang on a minute. What's that doing down there? Oh, blimey. Yeah. I don't think I have any chance to put this back together at all. I think this is pretty difficult to do. I'm trying my best. I don't even know quite where I am right now. Camera 1. Okay, we got camera 1 back. You can still see me though, right? As you can see, it's very difficult to control what's happening. I feel like I'm flying a plane that's crashing, but I'm trying to get control of it. And the only way I know how to do that is show. Okay. Here's the report.
We're kind of working through that, but exactly as you say, we get further away from price increases, we get to a stronger seasonal period, we get to strength of slate, and we're working to address all these things. Some of them take a little bit more time to address, like what we talked about with paid sharing, which we'll talk about in the letter, and I'm sure you'll get to that. But some of these we actually have to take action to.
Very different, clearly, in 2008 and 2009. But in a recession and just tougher macro in general, how do you think Netflix and streaming more broadly would hold up?
You want me to take it, or you want somebody else?
I'll just add real quick, I think it's really important that, particularly in tough economic times, that consumers see Netflix as a tremendous value. So adding great content that they love and that they can't wait for the new season, to add tremendous value in the form of this Friday, what do you see this movie Gray Man that's going to be premiering on Netflix? This is an enormous, big budget action film that normally people would have to go out and spend an enormous amount of money to go see. And they're going to premiering it on Netflix. And then we've got a steady drumbeat from movies like Me Time with Kevin Hart and Mark Wahlberg coming up, and a new edition of 365, next 365 days, a big franchise, a new season of Cobra Kai. Obviously, we saw the impact from Stranger Things this quarter, but that's just like the tip of the iceberg for the value that we're bringing to the consumer. And I think the consumer will embrace that even more so in tougher economic times.
Okay,
Maybe
great.
to extend that just a touch. I mean,
Sure.
we think Netflix is a great entertainment value. We want to make sure that it is a great entertainment value. We try to provide a range of price points to consumers around the world to make sure that service is accessible even in the current environment. And I would say, I'm sure we'll get to this in a little bit, but I think that our ad-supported offering is an extension of that sort of pro-consumer wide range of prices that will increase the accessibility of the service, especially in the years to come.
And just to build on, lastly, just at the risk of beating. Oh, Spencer, go ahead. You'll hit on it. Go for it.
Oh, sorry, Doug. I was just going to add, if you zoom out a bit and look at past economic cycles, at least in the U.S., most forms of entertainment have been fairly resilient to downturns. There's a level of escapism, I think, that entertainment provides. Also, if you look at the pay TV business over economic cycles, it tends to be a bit more resilient as well, just because the value of in-home entertainment increases as folks perhaps don't go out as much, and also as a subscription business, it tends to be a little bit stickier. I don't, obviously every recession and cycle is different, so we don't want to take that for granted, and we're monitoring it pretty closely. But that's hopefully a little bit of helpful context for you.
That's helpful. Thank you. So let's shift gears, talk about advertising, clearly on everybody's minds. Reed, you've talked about making the Netflix ad tier a better ad experience than what's available on TV today. Can you give us an update on what the product will look like, some early thoughts there, and then also about more around timing, which I think you said early 2023?
That's a great question for Greg here.
Yeah, I think we're looking at this as an extension of, two things that we think that we've historically done, which is one, be very consumer centric and think about the customer experience. And then also just taking an innovation oriented view, whether it's, sort of how we started in streaming to how we think about, great quality of experience and the innovations we've led in, I think, in the discovery and choosing side. So we think that we have a real opportunity here to, through a period of years and iteratively. So I want to set expectations at the onset. We're going to take an iterative approach. This is what we call the crawl, walk, run model. So at the beginning, it'll look, what you're familiar with, but over time, we think there's a tremendous opportunity to leverage that, that innovation DNA that we have, as well as a bunch of just sort of enabling characteristics around addressability and measurability and things like that, to one, provide an incredible experience for consumers, those who choose to take the ad-supported offering, but also provide an incredible experience for brands and advertisers who want to work with us to make sure that we're doing a good job of elevating what that looks like for them. So there's a bunch of lines of inquiry, lines of innovation that we're going after that sort of support all of that piece, and I think we'll get into that iteratively as we go. But I think, when you look at the scale of our offering, the technical DNA we have, the partners that we've got lined up, I'm pretty optimistic that, over a couple years, we can deliver an experience which is, fundamentally different from the ad experience on linear in a way that supports all of those stakeholders.
And Greg, when you say the partners that you have lined up, I mean, Microsoft obviously a key one, but are you referring to advertisers here as well? They're already, taking a lot of interest. Maybe you could talk more about what that looks like at this early stage.
Yeah, we've seen a lot of excitement in our early discussions with brands, holding companies and the agencies, because I think for them it's been they've wanted to connect with the titles, the incredible content that Ted's team is putting out there. And I think we also share a perspective on what is a great experience for consumers and for advertisers. So when we think about the kind of advertising we see, frequency caps, what's a great ad experience, we're noticing a high degree of alignment there. So that enthusiasm, that alignment, is increasing sort of my optimism and the excitement that I've got to basically get this out there, because I think it's going to be a win-win-win for all parties involved.
So in terms of the Microsoft deal, will ads be sold early on exclusively by Microsoft? And how do you think about your desire to build out more of your own sales force over time?
Yeah, so all of the ads that are served on our ad-supported offering will come through Microsoft. So that's an exclusive arrangement with them. But one of the reasons that we're partnering with Microsoft, there's a bunch of fundamentals. They've got a technical capacity which is complementary to ours, a go-to-market capacity which we need to leverage, and it'll be very important for us. But a key component of what we liked about this partnership was that there was sort of a flexibility and that innovation orientation that I mentioned before. And so they very much, I think, are approaching this as an opportunity to work together, to collaborate, and to sort of evolve both the technical capacity and also, sort of what the experience is and what the go-to-market approach is. So we've got lots of flexibility to work together there and evolve that over time.
Okay. You already have tiers across a range of prices. But what do you anticipate will happen in terms of members switching plans and perhaps trading down to the ad-supported tier? And do you have a view, kind of long-term, what percentage of subscribers might be on the ad-supported tier?
Yeah, I would say in general, we know that there's price sensitivity around consumers, and that some of those consumers are folks that have never actually ever signed up for Netflix. Some of them are folks that were members for us for a period of time, and they decided to cancel for a variety of reasons. Some of those are folks that are currently watching Netflix, but they're using another paying member's account credentials, right? So those all, I think, represent opportunities for us because we're bringing a wider range of prices through the ad-supported offering, a lower consumer-facing price. to be able to attract a broader set of members. So that's sort of very consistent with our wide range of pricing and our general goals there. We think that's that's great for consumers. It's good for us, obviously. And when we run the models and in talking to brands, advertisers, to Microsoft, we look at the monetization that is the complement to that sort of subscription part of the ad-supported offering. And we're quite optimistic that the sort of unit economics work to make that monetization sort of equal or maybe even better than what we would see on the comparable side for the non-ad subscription only kind of plans. So we think that this is, again, expansive from a member reach perspective, but also neutral to positive on the unit economics of monetization. So that's great for us for obviously from a business perspective.
And should we be thinking about this as a single tier, essentially below the basic plan?
I would say over a period of time, we think that this is sort of one of the dimensions that will inform sort of our plan structure. And I would say generally are thinking of, going from our good, better, best model that has been sort of, the core offering that we've had, into making that, slightly more complicated because we're going to have more sort of discrimination features that, that would inform what, offering consumers ultimately choose to get to. So there'll be a little bit more complexity there, and no ads will be one of those dimensions. But we want to work into that model, and obviously, while we're thinking about sort of the right pricing model there, we also want to keep it as simple as we can from a consumer facing perspective. So in terms of the on-ramp, the plan selection, how upsells happen, we want to sort of work those flows iteratively over time, so we build into that complexity without making it overwhelming for consumers.
Sure. Okay. And you talked about advertising monetization, essentially helping close the gap perhaps with current ARM or getting above that level. How do you think about timing, and perhaps how long it could take to get to kind of current ARM levels on the ad tier?
I think about the timing more as sort of how we roll this out and how we sort of build, more subscribers on those ad-supported offerings. So, a component of this is countries. So obviously, we're launching first in the countries that have sort of the more mature ad markets, and we feel more confident in the ad monetization. Then we'll sort of explore, next tiers of countries over time. So that's a dimension of growth. But I would say the initial response that we're getting from a brand and advertiser perspective is quite strong. So we feel quite confident that as we sort of grow into this and we have more subscribers over time on these plans, that at least initially the unit economics are going to be are quite good. So we don't sort of see this as sort of building in that call it CPM side so much more, as that we're actually building the total amount of volume on those plans, and then the total amount of revenue. And again, this is going to start small relative to our total revenue mix, but we think we can grow it to be substantial over a period of time.
I think that's key, Doug, is that this is going to build over time. It's not like all of a sudden all folks on ad-free Netflix are going to join advertising Netflix. And so supply demand, I think probably works in our favor between both geography as well as opening up the aperture to our members.
Okay. You talked in the letter certainly about the ad product as having the potential and likelihood to drive overall member growth, and then certainly overall profitability. But Spence, maybe you could talk a little bit about what it means for margins and some of the puts and takes there versus the current business.
I'd say overall, Doug, these are, this is our focus is, as we've talked about, these initiatives across paid sharing as well as advertising as ways to better monetize our viewing and grow members. As Greg said, advertising as an example, it can do both. And we believe we can do this both as in a revenue accretive way as well as a profit accretive way. As we roll out a solution for paid sharing, that probably has a more near-term impact once we get to a solution that works and there's not a lot of incremental expense to that. And then on the advertising side, we have obviously some incremental costs that go against that business, but as Greg said, there's incremental revenue, we believe, at the unit economic level. So we think we can manage that to an operating income neutral to positive pretty soon out of the gate. So, but it's a slower build over multiple years to have a material impact on the business. But our focus across 2023 and 24 is to build out to kind of return to a more accelerated revenue trajectory for the business.
Okay. Along those lines, there's been a lot of discussion around that Netflix needs to renegotiate deals, perhaps with content providers to monetize through advertising. But also, a lot of your viewing clearly comes through original content. Maybe you can help us understand what needs to be done on the licensing side and how to think about some of those incremental costs.
So
Ted, do you
Doug,
want to jump in?
today the vast majority of what people watch on Netflix, we can include in the ad-supported tier today. So there's some things that we're in conversation with the studios on. But if we launch the product today, the members in the ad tier would have a great experience, and we will clear some additional content, but certainly not all of it. If we so we're looking, but we don't think it's a material holdback to the business.
Okay.
It's certainly a nice to have, Doug, but it's not a must have.
Yeah.
As Ted says, we can launch today without any additional content clearance rights. And, hopefully we can supplement that, but we'll be disciplined in what we do.
Got it. Okay. Why did you choose Microsoft over other potential ad partners?
At some basic levels, they've got the technical components we need. They've got the go-to-market components we need. They met a bunch of sort of fundamental, what I would characterize as table stakes pieces, which is a strong commitment to privacy, data protection for our consumers, things that we cared a lot about and were fundamental to us. But I would say, at the beyond those things, it was really what I mentioned before, which is that we saw a high degree of strategic alignment in their interest in innovating in this space and really working with us over the next several years to basically try and create a new ads ecosystem around premium TV, connected TV, ads. And so, both from the consumer perspective, because that's a really important, and I think we've seen this sort of long arc of advertising towards very pro-consumer, let's make advertising part of the quality of the experience, rather than detracting from it, as well as having a really, strong brand and advertiser kind of focus on what do they need to support their goals from there. And so, we saw that as being, a lot of alignment out of that, and we're just excited to sort of work with them iteratively on making that happen.
And is it fair to think that there are some significant guaranteed revenue commitments here over the next few years?
I would say we're not going to go into the specifics of any of the deal, the terms of the deal.
Okay. I'll try one more. I'm not sure what I'll get, but Microsoft, look, is the deal, can this be broader, and can it be a more strategic partnership beyond advertising? Can it involve elements of cloud, gaming, perhaps other things over time?
Yeah, so a couple things there. First of all, we picked Microsoft as our ads partner because we think they're going to be great as an ads partner. So that was really the criteria that was used to inform how we thought about the choice. You mentioned cloud. We're super excited about Amazon and our partnership with them, and we haven't changed that relationship. We haven't changed our focus on AWS as essentially our cloud infrastructure partner there. So we also have, we've done other stuff with Microsoft. We continue to do work with them on sort of go-to-market partnerships, things like that. We'll look for those opportunities as they exist with Microsoft and with other companies, as well. So I would say, this doesn't foreclose on anything like that, but you should think about this as this was about, a great ads partnership deal at the end of the day.
Okay, great. So let's shift gears, talk about account sharing a little bit. You put out a blog post yesterday, kind of expanding your efforts to monetize account sharing in LATAM across 5 new markets, but a slightly different implementation than in the first 3 countries that you announced in March. Just curious what you've learned here early on over these last few months, and just how you're thinking about these different implementations going forward.
Yeah, first of all, I'm excited to get to the stage. We've been sort of working behind the scenes, for almost 2 years and building the technical capabilities to get this stuff rolled out. And now we actually get to put something in front of consumers and see how they react. And this is sort of where the rubber meets the road. So we've got the 2 models, as you expressed. Essentially both of them are similar in that they ask consumers, not to stop sharing so much, but just to pay a little bit more for different forms of sharing. And the first model that we deployed, it's, pay a little bit more to add a member and share with those additional members. The second model we're trying is pay a little bit more to add an additional home and, share the account with the additional homes. So, really at this point, we'll sort of see, what works for consumers. That's obviously the reason we're trying these different approaches, is to learn more. We're learning a lot every day on a daily basis at this point in time based on what we've deployed. And I would say, while it's early, to call it, obviously we just, are getting going on the second approach. So we'll learn more from that. I would say we're tracking quite well to, sort of the plan that we had in place, and I am increasingly confident, that based on what we're seeing, that we'll have something that we can deploy next year as we were planning.
Okay, and can you talk about some of the technology that you're using here, just to ensure that you're not limiting access for legitimately paying members who are traveling or perhaps away from home, whether that's IP addresses or device ID or other things?
Yeah, and one of the reasons, we've been working on this quite some time is because we were building those capacities in the background. So, and these are mostly technical implementations that understand through a variety of network signals and stuff, what is happening. But then, it's sort of putting it through the lens of the consumer-facing model. And so in each of these two approaches have, slightly different characteristics, but generally we're trying to lean into a consumer-friendly model that supports, legitimate use cases. Travel is a good example of that. Personal device use, using, your mobile phone as you go around the world, your PC, things like that. So supporting those legitimate use cases, but also making sure that, we're doing a good job at, getting paid as a business when we're delivering entertainment to folks outside that household or that home, in a way that is reasonable, where we're asking for a little bit of extra monetization to make that happen, make it a smooth transition as we can for users, and really trying to balance that sort of very pro-consumer, consumer choice model with what we think are practical considerations as a business. So those approaches are different, and that's obviously why we're trying these different things, to figure out sort of which is going to work better in managing that balance point.
Okay, and timing here, I think you said, is also 2023. Do you need to have account sharing and kind of lining up with the advertising tier rollout, or are there some benefits in doing that, or is it not kind of strategically important to you?
We're pursuing both independently because we think that there's, value to the business and value to consumers, frankly, especially on the ads plan with a wide range of prices. So we're pursuing them independently. Now, there's a great, synergy that happens when, as we think about on sharing and paid sharing, part of this is being able to offer to a range of folks who may be borrowing Netflix because they didn't quite see as much value from the entertainment and the viewing, to sort of motivate getting their own plan. That's part of that segment. Part of the segment, we just have to encourage them, push them, and nudge them to get to that point. But part of what's great about ads is that obviously we get to give folks that are seeing a little bit less value a lower price, and be able to convince more of them to sign up through that ads plan.
Okay, Ted, we're going to talk about content, I promise. All right, so maybe you can talk a little bit about how content performed in 2Q, and how you're thinking about it into the back half. Stranger Things, obviously your best English series debut of all time, Stranger Things 4, but go ahead.
Yeah, look, I think these titles continue to hit new heights, which is really, fantastic that we can still be doing this back to back and delivering hits on top of hits. And I think that really belongs to the content teams that do such a phenomenal job around the world. Bella Bajaria, who heads that TV group, and they keep surpassing records like we had been able to do with Stranger Things and Bridgerton and Squid Game. And our biggest hits have all come out in the last 12 months, which is a really kind of a phenomenal sign of progress. Scott Stuber and his film team really killing it. Again, I'm going to call back to the Friday release of Gray Man, because I think it's an unbelievable proof point of what kind of films that this team can put out. I think that this is, and again, this is kind of back to back to back, where I think Gray Man will join Red Notice and Adam Project and Don't Look Up as among the most popular movies of the year. not just on Netflix, but period. And I think that really is a testimony to these teams and the teams around the world working great with creators to create a platform for them to do the best work of their lives. So we've been really pleased with the output. We've been pleased with the performance. 35 of our original shows are nominated for Emmys this year, which says a lot about the work that's coming out, including 3 Best Drama nominees, which happen to be among our most watched shows on Netflix ever. So the fact that they could be crowd pleasing and award winning is a pretty tough and pretty gratifying combination.
And to kind of toot Ted and the team's horn, driving engagement, which is really the North Star, driving viewing, because then we can drive member growth and monetization around it. And as we referenced in the letter, using the U.S. market as an example, Nielsen's going to be reporting later this week 7.7% screen time share for Netflix, which is the highest we've ever been, which is again testament to the team and the quality and engagement of what they're delivering.
All right. Hopefully they won't mind that you gave that number a little early. Okay. Let's go back to Gray Man for a minute. Ted, how are you approaching the marketing differently, perhaps for this title versus some of the other big movies that you've had in the past?
Well, look, I think you've seen a lot of it out there. I think we've done, based on the marketability of the projects themselves. This is why our marketing spend is a bit lumpy, because we really are trying to focus on the titles that mean a lot to our members and that create a lot of excitement and conversation around the world. Gray Man is certainly one of those movies that's going to attract a very broad audience. So you'll see the marketing spend out there pretty aggressively. I should point out, Martyn Lee, our new CMO, is doing a phenomenal job. She came from inside of Netflix. She was running the US. She hit the ground running with that remarkable Stranger Things campaign. I think our best campaign to date, one of the strongest marketing campaigns I've ever seen. And she's in there, backed it straight up with Gray Man. So I think these campaigns are really doing a ton to bolster conversation around the world around these projects. So it's not enough just to watch, but also to get your friends to watch with you too. So it helps bring folks along in the conversation.
So with Stranger Things 4, your best English series debut of all time, which we talked about, are there ways that you can leverage that record-breaking viewing to drive engagement with other shows and learnings that you can take to build out additional franchise content?
Yeah, look, I think that time spent is the engagement is such an important metric, because the time spent on Netflix means you come in and you're exposed to everything else we're doing as well. And Greg and the product team do such a phenomenal job of, audience matching to put the most relevant thing in front of you when you come to Netflix, that you're bound to be exposed to something you're going to love. You also see it in the kind of that targeted post-play mechanism. So once you get through that last episode and you're getting that 1 second of anxiety about what am I going to watch next, you've got a couple of great choices in front of you, and folks use that tool all the time to find the next great thing to watch on Netflix. So it's a pretty great audience where I think it's rewarded, and that the more you watch, the more you'll find great things. So I think we get a Stranger Things that really pays off. We get a Gray Man that really pays off. We just got to do that constantly, Doug. The idea is that not only can we deliver on that, but people should expect it back to back.
And Ted, how do you balance out driving both that high quality content and the significant scale? Because you're clearly releasing a lot of content on an annual basis. Does anything change in your process around content going forward?
Look, I think the focus on quality has always been there, and it's intensified as competition's intensified. So I think we've got to really focus on working tightly with I think the output of great content is generally the result of 1,000 great decisions. And the most important one is the creator that you're working with, and picking people who really want to win for the audience, and working with our teams to create great TV shows that can go on for, multiple seasons, or great movies that spawn sequels, or just great content that comes in and lives through its life and its episodes and makes people feel great. So I do think that the focus on quality, and the thing that I've always said from the beginning, is scale. Scale is the thing that we're going to do that no one else has ever done yet. And the way that we're doing it today is that kind of distributed decision making among the teams, the decision making on the ground in country for our teams making original content. what enables this thing to scale. If it all bottlenecked behind one or two or three decision makers in California, we wouldn't be able to do what we're doing today for sure.
Okay. So to support that content, you've talked in the past about kind of the 17 to 18 billion dollar spending for this year. Spence, maybe you can update kind of how you're thinking about it for 22. And as we talk to investors, there's probably about half of them that actually want content spending to come down some and to be kind of reined in a little bit. And then the other half wants that to continue to grow and find more hits and go more globally.
So half want more and half want less, Doug? Half want more. Welcome to our life.
I hear you. How do you think about that content spending going forward?
Well, sure, I can take it, and maybe Ted, you chime in. As you said, we're expecting to spend on cash content spend about $17 billion this year, Doug. As we look forward, 2023, next few years, I'd say we're probably in about the right zip code. So we've come through a pretty big business transition for us, and the most cash intensive portion of that transition over the last 5-10 years, where we moved to Netflix originals predominantly, and producing our own content largely. So about 60% of our content assets on the balance sheet are produced content. So that's been a pretty big transition. We've come through that. And then also, cash content spend's a little bit choppy. So we went through a bit of that COVID wave. We were coming out of COVID. We got into production when we could, as quickly as we could on some things, including when talent was available. So that pulled forward some cash content spend in 21 and 22. So I'd say just generally, when we look out the next few years, we'll be probably right around in that zip code, which puts us in a good place. It also, as we said, we were trying to work through moderating our growth in content expense. So our content expense will continue to grow, but it's more moderated as we adjusted for the growth in our revenue. And we think we've gotten a lot smarter over the last decade or so of being in the originals business as to where we can direct our spend for most impact, highest impact, and highest satisfaction for our members. So that's about, roughly how we're thinking about it.
Yeah, we
I don't know who that makes happy, by the way. No, I don't know if it makes either one of them happy.
Just half of them. Where we are today, and we think that we're about in the right zip code. And like Spence said, that COVID distortion in the last 2 years will kind of make it a little murky. But in general, I think that we're kind of in the right zip code. I agree.
Doug, just to give you a sense, we have about time for 2 more questions. But Reed, I think you want to add something.
Ted, maybe just talk about Stranger Things 4 as an example. How much did COVID inflate the production costs in your view?
Well, that particular show was probably affected as much as any because of the young cast and the size and scope of the production and the multiple locations we shot in. So it was a very expensive burden on the show to make sure that we could deliver it. One of the catalysts of splitting the season in half was how long it took to produce that show, and a lot of that was stalled because of early shutdown of the production and restarting production, and being extremely careful with the cast of the show early on in COVID. So it was more financially impacted than a lot of our other projects were. But again, I think if you did that all again and took that off the top, you might even get a couple of extra episodes out of it.
And more broadly, maybe Reed, as a way to think about it, is throughout COVID, we were at various times 5 to 10% of our overall spend was kind of COVID related cost that, it started higher, worked down lower. So on these kind of numbers, that's significant. And it's obviously much smaller now, but that was a big, kind of drag on our overall efficiency of spend.
And that wasn't an overall 5% across all productions. Some of them impacted a lot more than others.
Exactly.
Okay, I want to make sure we talk about operating margins and, of course, free cash flow. So operating margins, Spence, I think you're talking about 19 to 20% for this year, but X restructuring, and then also I think the FX changes from January when those numbers were first provided. So maybe you can just provide a little more context there.
Yeah, so when we had our call, we basically are holding to our margin guidance. So at the beginning of the year on the Q4 21 call, so as we launched and started this year, we said we already saw kind of slowing revenue growth, and we said given the slowing revenue growth, we're going to manage to a 19 to 20% operating margin before any impact of major swings in FX, and that's what we're still holding to. So this year, we've got the FX moves, and then we also mentioned the 150 million of restructuring. We're not expecting more restructuring costs throughout the year, so that's what's baked into it, and we're holding to our margin guide, and similarly holding to it for 23. So basically, we're saying until we reignite revenue growth, we're holding flat to that margin guide. So overall, underlying very healthy operating metrics. I mean, when you look at the revenue side, it's, we're tracking, it's 13% constant currency revenue growth this quarter. We're guiding at 12% next quarter. You can see the read-throughs in a kind of a similar range for the full year, and to 19 to 20% operating margins for this year and next. But obviously, the strengthening of the U.S. dollar is a major outlier, and we just need to kind of work through that and operate our, as best we can on what we can control in the meantime.
Okay, and on free cash flow, so 2022, really your first year of sustainable kind of strong free cash flow. You're talking about $1 billion or so for the year. How are you thinking about some of the key puts and takes around that, and what does substantial growth mean in 23?
Well, it'll be more than the roughly $1 billion. So again, the numbers we provided are again, assuming no major additional kind of big swings in FX. So hopefully we've seen the most of that, given the extraordinary moves in the last 3 to 6 months, more than we've seen in the last 20 years. But as you say, we're guiding to $1 billion plus or minus a few hundred million of positive free cash flow in 22. We think that'll continue to grow substantially next year. It's a combination of what we said before. We're through that kind of cash intensive transition of our business. We're also operating about kind of roughly similar levels of cash content spend next year as this year. In fact, as we said, we pulled forward a little bit of cash spend into 21, 22. So those things are kind of working in our favor as we continue to scale the business. So I don't want to put a specific number out there, but assume it'll be kind of meaningfully more. And then obviously, as we, kind of work through what we expect to do in terms of accelerating our revenue growth, and then start ramping up operating margins again. And, hopefully there's a little bit of reversion on these various global currencies. All those things accelerate cash flow generation down the road.
Okay, and then we'd just love to maybe close out with what content each of you are most excited about in the back half. And I don't know if it's Gray Man for everybody or not, but I'm sure there's a lot of other good things.
Well, Gray Man's has a recency advantage for sure, because it's coming on this Friday, and it is mind-blowing.
I'll go with
for me,
another reason.
I was like, for me, Doug, I'm super excited for Knives Out 2. I've heard great things from our content executives on that one, so definitely anticipating that one for me.
Spencer, you beat me to the punch there. I was going to go Knives Out too, but I'll flip back to what I'm currently watching, which is Umbrella Academy, which is a great current season.
I'll jump in and let Reed close it out. I've been going through Stranger Things to catch up. I just finished that, and I am really looking forward to Extraordinary Attorney Woo. I'm hearing great things from everyone throughout the hallways, and I'm excited to watch it soon.
I'm going to be in trouble because we just watched Michael Pollan about hallucinogenics, and a great documentary series.
Changing your mind. Yeah. Thanks a lot, Doug. Hey, billions of people around the world love streaming TV and film, and we only serve a few hundred million of them. So the opportunity for growth here is enormous. We have some headwinds right now, and we are navigating through them. Remember, this company and this team has navigated through a lot of change in the last 20 plus years. We've seen entertainment formats come and go. We've seen entertainment business models come and go, and we have managed to grow through all of them, through all kinds of economic conditions and through all levels of competition. So we're super confident that as long as we make the films and the TV series and the games that people love, we're going to continue to lead this exciting and young industry. Thanks a lot, Doug.
Okay, there we go. We had a few technical issues this evening, but we did somehow get through it. It was very, very difficult, but there we go. Thank you very much for being part of tonight's event. We did finally get there. And thank you ever so much, everyone who subscribed and supported me throughout the show. And we'll see you back in the morning. We've got another big day tomorrow. Of course, tomorrow is the opening bell, closing bell, and then we've got Tesla, the biggest day of the year. It's one of my most favorite shares, my most favorite stocks. It's my third biggest position on my portfolio. We've got all that for you in the morning. So thank you very much for being here. But that's it from me. We won't run the credits tonight because I'm barely holding the production together. Lots of stuff to refix now once we reboot. Anyway, thank you ever so much indeed for being here. I'll see you back in the morning. Until then, take care of yourselves and each other.